PJ, welcome to First View. Thank you for joining me.
Thanks for having me.
All right, so um, let me just introduce PJ. So he's the founder and CEO of RegRisk Legal Solutions, the leading authority on regulatory compliance in banking. So let's just jump straight in. So it's been what, 17 years since the banking crisis, whole load of regulations, still more coming. Is it enough? When is enough?
I mean, sadly, enough is only when the world is completely safe, which I don't think will ever happen. And ultimately, when I first met regulation, even a couple years before that, we said, "Oh my God, there's so much change," and it takes a long time to align why regulators are going after these particular changes, but it's all driven by politics in the markets first and foremost. The drives change. ESG and your definition of what is good look like changes year to year. Basel and how you look at risk can vary depending on the political landscape. Things like digital assets, they come and go onto the radars of the politicians, and they don't know what to make of them. So there's a lot of bigger picture stuff about how the economy works, how the world hangs together. And ultimately, you can't turn that tap off because there are real risks out there that need to be dealt with.
Yeah, I suppose there are new things like some of the AI stuff is going to change quite a bit as we come in. That this is something none of us really understand yet, but we'll come back to that topic. If the sort of new Trump administration has sort of threatened, maybe that's not quite the right word, to halt some of this or reverse some of this regulatory change. Is there a place where you'd start if you did have to reverse it? Could you? Is there anything that you would take out to say that's not been very effective?
It's an easy soundbite. We're going to get rid of red tape. And here in the UK, I don't know how many times we've heard that from the politicians, but they very rarely come up with anything meaningful. There are things that you can do and tweak, but they're around the edges. And I guess ultimately that's back to the fact that this is just an ongoing process, right? It's the world trying to work out how it wants to manage what good looks like. And ultimately, the financial institutions have become very good at using regulations as a moat, and making sure that they have an internal practice that is defensible across the globe, and that often keeps large tech companies out of their patch, right? And obviously, that's more and more of an issue. So, can one jurisdiction say all of a sudden, no, we want to roll back global standards, and we don't need to look at these particular problems? It's going to be hard because the financial institutions themselves aren't going to want that to happen, and ultimately the customers are the people that they're responding to. So if all of a sudden it becomes very unsafe to do business in the U.S., you're going to see corporations choose to go elsewhere. So. Answer your question, I guess it's too hard for me. In my view, it's hard to see something like the Trump administration really forcing a global change to the agenda. However, the big thing that they could do is just stop pushing forward. So they could say, all right, we're not going to finish this Basel program, or we're not going to say anything about digital assets and just see what happens. But then that creates even a bigger barrier for anyone getting into the global market because they're not going to have this big global framework of how everything fits together.
Yeah, it's not gonna. I can't see Europe stopping, and I can't see some other parts of the world stopping. So, and given the fact that these are global banks, you have to. It's not just your domestic jurisdiction that you have to comply with.
Yeah, and Europe has very much become the adult in the room, and ultimately there's become a greater and greater distance between the major centers, and really the UK sits right in the middle of that. So it's a really interesting place to sit here and look at from a policy perspective that creates a lot of interesting opportunity.
Yeah. I mean, I think sometimes I think I come across as being a bit anti-reg, and I'm definitely not, because you only have to look at the history of financial markets and financial services to show that regulatory control has actually produced way better market conditions, better products, better transparency. So there's an awful lot of good that has come out of regulation. But sometimes I'm a little cynical and talk about sort of MiFID 27 and the cottage industry that maybe we've created here with a lot of regulatory bodies justifying their existence by tinkering with regulations. Do you think that is that a thing, or am I being overly cynical?
Look, I think that it's right to have a healthy degree of skepticism, because I think what's happened over time is the policy armies, quite literally, the scores and scores of policy makers need to find something to do. They need these policy agendas to work on. And interestingly, if you look at Europe's agenda, you don't see the whole heaps of things that they once were working on. So it creates a bit of a gap that people look to fill. But all that said, I think that there is a certain amount of refinement that's required. I mean, we're talking about the MiFID 2.5 going on MiFID 3. Why? Because we didn't really get it all right in the first 1 and 2, and there are some real efficiencies that can be gained, and there are some things that we can do a lot better. So ultimately, I think that the bigger picture message for me is that the compliance needs to be thought about as an efficient, repeatable, and long-term process. It's not something you just do once, for one regulation. You don't just throw a contractor at the problem, send them over a hill. When I first started in this business, we talked about throwing the contractor over the hill to BlackBerry. And ultimately that ethos is still kind of there. But ultimately, the good firms, the firms that get the fact that these supply chains are global and the regulation really affects the way they can do business, have started to think about this in a more repeatable, capability-driven manner, and really how they can think about constantly staying up to date and keeping in line with the regs.
Yeah, we can see that as well with some of the conversations we have with clients, that the way a lot of this regulation came about was very piecemeal and very knee-jerk reaction. So it was like, we need to conform with this, therefore we build something that does it. Then we need to do something over here, so we build there, and we've gone and created almost like a sort of hodgepodge of systems and reportings, and very really quite inefficient. And it's actually encouraging to hear that if the regs can become more efficient themselves, but there's probably a lot of work can be done on the banking side to make the compliance element more efficient and cheaper to be part of and be regulated that way.
Yeah, and I think I still see the same behaviors that I had when I was looking at the change to bank budget. You want to throw your resource towards where the front office is going to be making money, because that obviously incentivizes everybody to get bigger bonuses. But you can't cut back and be too stingy on the mandatory changes for compliance. And yes, it's a small pot of resource that you have, but you need to think about year after year, making sure that you're balancing both the get out in the market and grow the business versus protecting the franchise.
Yeah, no, I think that's true, and it's clear to see that this is about protecting everything, protecting the franchise, protecting the economic system that we all live in. So, banks are so significant, as we saw from back in 2008. So, a lot of good has come from this. But there is. There is still that element of like, oh, it's too much, I'd rather be spending money on the front office. But I think we're on a good path. But it is a fact of life. It's going to be here for some time.
Yeah, and amen. I mean, when CrowdStrike happened and you couldn't take a plane or you couldn't make a payment, all of a sudden you noticed that the infrastructure really mattered. And you're kind of happy that now the regulators are going after all the banks and writing letters to them saying, well, please explain why you aren't operationally resilient. And it's kind of thing where as the importance of this infrastructure matters more to people in their day-to-day lives, we really need to think about, well, how well are we actually managing it?
Yeah, I mean, the threats to modern life are completely different to what they were 20 years ago. So, you can see why regulation needs to expand to take account of elements like that. PJ, thank you so much for joining us. It was great speaking to you, and hopefully we'll have you back again soon.
My pleasure, David.